Higher Treasury yields and oil prices are testing this massive rally. The S&P 500 and NASDAQ are up big since March 30th, despite the ongoing conflict in Iran and a closed Strait of Hormuz. And as peace negotiations stall, President Trump is getting impatient. Writing on Truth Social, the clock is ticking. Iran better get moving fast or there won't be anything left of them. So what is next? The president is reportedly meeting with national security advisors tomorrow to figure out. Let's see.
We're on the cusp of going back into military operations, a grouping of targets that really deal with all of Iran's revenue sources to force an economic collapse of the regime. Obviously, Cargill and blockade is having significant impact, but this attack will even further aggravate their ability to gain revenue source. Without revenue, it's hard to see how this regime can survive.
So I agree with the General Kennedy. The blockade has been effective, but I've also heard the president threaten now a bunch of times, more than I can count on one hand, that he's going to obliterate them if they don't do what they need to do, and then we don't do it. And I wonder how that's starting to look.
For the administration, I have a feeling that the Hawks are going to prevail on this one, and there is going to be some bang, bang, pew, pew very soon, because you can't make promises like that, at least historically from this president, and not back them up with some action. And as we have seen in the past, when he's this vociferous, he tends to follow it up, and people should not underestimate that. But I want to know from you, how do people there feel? Like, how do they feel about the regime? Do they feel like Israel and America are working in concert for their needs and not just the energy needs of the world?
I think they do. I think, well, you have two factions, right? You have the supporters of the military regime there, the IRGC, they drink the Kool-Aid and they go along with it. Then you've got everybody else who wants to see the country in different hands, and they believe President Trump and they're trusting him. And they're hoping that this is going to lead to an opportunity for them to be able to take their country back. Has it been slower than they wanted or than they were anticipating from the beginning? I think definitely slower, but they're still waiting for that moment. I think they'd be very disappointed if the president stopped the operation here, made some sort of a sham deal with this regime and called it a new regime. But I mean, I also know in my heart, he will not do that. He has an objective. Unless he gets everything that he wants, I don't think he will do that. So I'm still kind of like, stay tuned at this point.
Yeah, I think it's going to get hot here pretty soon.
But thoughts on the impact to the market, because we were making the point that bond yields are high and markets are kind of taking a pause as they see where this goes. This has not been good necessarily for us here in the United States. The longer it goes, it doesn't necessarily get better. So it kind of, Brian, I would say it would be in the president's best interest to speed things along here, because talking has not worked so far.
It doesn't seem to have. Hey, what happened to Project Freedom? Remember Project Freedom, the Open the Strait project?
Yeah.
I loved that thing when it was announced a few weeks ago, and then it went away really quickly, and we haven't got it back. And here's why I say that, okay? Imagine a world like this one, okay, where the IRGC is still in power, some faction of them are still in power, okay, and we don't have the nuclear material, okay? We don't have the nuclear material, but the strait is open. 75% of the ships are going through it again. Oil's down to mid-70s, high 70s, and the 10 years below 4.5 and the 30 years below 5. Imagine that world for a second. If that was our world right now, I think time would firmly be on the side of President Trump. And we could deal with the nuclear stuff and we could deal with the regime, but we wouldn't have the stress of whatever's happening in the market right now. And I think that could be a reality if we were doing Project Freedom, but we're not doing it, and I don't get it, Jackie. And so I hope when he's talking with his security team, that's the number one thing on the table. Let's focus on getting the strait open and give ourselves maximum leverage against these guys.
What's the number one thing that happened in President Trump's visit to China? What's the number one commerce thing that happened?
Boeing
There's a lot of discussion. There's a lot of discussion around being able to buy fuel, being able to buy oil from the United States. And so I started to wonder over the weekend if we're not pumping the brakes a little bit to show everybody how difficult that region is, and if keeping it that difficult gives us the opportunity to be a larger provider of oil, to have North America, Canada, Mexico, all of us become more important in the end.
Agreed, but I think that message has been sent. Like, I think we're past the point where that message has been sent.
Can I ask a question, Brian, though?
Ask me.
Okay, so if the goal was to get China to move in our direction, would pausing Operation Freedom, would that have aided in talks with China? Was that leverage for us going into China saying, look, we can turn it on, we can turn it off? And did that summit have something to do with that decision, do you think?
Maybe, but I don't know what it really got us with China. I mean, I look at what happened with China. We got the Boeing jets, we got the soybeans. We're going to do something on tariffs maybe. But there wasn't a lot on Iran of any concrete substance, right? So
well, they both said that they didn't want the strait to be, both countries don't want the strait to be closed. Xi Jinping agreed. But, you know, I mean, okay.
That's what I mean.
A lot of people would say they don't want the strait to be closed. What are you going to do?
So maybe, you know, pausing Project Freedom might have had something to do with that. I don't know. I mean, I obviously don't know the answers to any of these things. All I know is if the strait was 75% open, you'd be economically in the U.S. We wouldn't be so worried about gas. We wouldn't be so worried about oil. We wouldn't be so worried about bond yields, and we wouldn't time would be on our side. And we could say, look, we're going to choke out this regime, right? We're going to let them crumble. They're going to crumble faster than us because we can get our stuff through the strait. The fact that we can't now means we're kind of in this race where it's like, how long does America tolerate these gas prices, these oil prices, these energy costs? And I just think, let's get out of that. Let's open the strait and get out of that.
Tegan?
We would be worried about bond yields, though, because the longer-term yields started going up as soon as the skirmish started. Now, we wouldn't have the 1-2 punch of inflation and additional government spending to drive the yields up. We would just have, because initially it was just the term premium that was going up. That was just supply driven. But now it's supply driven and inflation driven. So the very fact that President Trump was elected no more forever wars, right? Okay, so how long is this going to be? And how expensive is it going to be? I think that that's what's showing up in longer-term treasuries here. And I'll just note that the deficit for the first 7 months of the fiscal year is actually slightly lower than 25, the comparable period, because the numbers came out last Friday, I think. So it's only, you know, good times, and we're still running a 7-month deficit of $957 billion. So almost $1 trillion. But the interest on the debt is total so far in 7 months, $734 billion. It is more than 7% higher than it was in the previous fiscal year. The average, every month, we are spending almost $105 billion on just interest.
So what should Warsh do about that?
Well, here you go. The Fed can keep interest rates at short-term rates at 3%. It's 3.5%. Rates right now are stimulative. They're lower than the inflation rate. They can keep them, say, I'm just throwing these numbers out, short-term rates at 3% and inflation is close to 4%, and you can inflate away the debt and some of the problems go away, just not for the American people. There's no magic button that makes your mortgage lower than 8% when longer term rates are higher. One of the reasons that all the all the government borrowing went short term is there hasn't been that much demand for longer term debt in recent years. A lot of it was Janet Yellen trying to juice rates for Joe Biden and their liberal cronies. So there hadn't been that, people don't really need investments for a 30-year period. So the demand hasn't been there. And then, people got so screwed owning longer-term debt and have lost so much money, they've turned their backs on the federal government for this longer-term borrowing. So it becomes this cycle of, and this one of the reasons that stocks are rallying like that is because there's no better inflation hedge than stocks, because companies' profits inflate with inflation.
Do you think the rates are lower than they should be right now?
Well, I think the bet is that inflation comes back down.
If it doesn't, are they lower than they should be?
Yeah.
Okay.
Yeah. The New York Post just coming out with a headline that I wanted to share with everyone because they said they had a brief conversation with President Trump on the telephone. And their headline is that Trump tells the Post Iran knows what's going to be happening soon after the president huddles with his national security team. And essentially, they're saying that the president said after the draft of what came back to him that there are no more options to offer diplomatic talks anymore. So to your point, to start the segment off, I think it's real this time.
Gonna get hot?
Yeah, I think they've had rational hopes for irrational actors, and it's time for a scene change.
Well said.
Thank you.
All right.